All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research.
For today's video, we're going to be running through HANetf's distribution announcement, and we will be looking at quite a lot of data, looking at the total return. We'll be looking at how the NAV has been keeping up. Now we've got a little bit more data to look at and exactly what the distributions have been announced for this month. Let's get right into it. First up, we've got YMAP, which is YMAP's Big Tech Options Income ETF. This has consistently paid around 24%. So have a little dig into some of the stats for this. 45 million AUM now, growing very nicely. The management fee is 99 basis points. It is a dividend paying asset, which its distribution rate is 24%. It is domiciled in Ireland, so there's no withholding tax. If we look at the distributions right now, so we start at 105. We've now had 6 payments. So it's consistently paid between $105 and $108, which is really nice. The latest payment of $1.0865. As we can see from the chart right here, we can see it's been a very consistent payer. Monthly pay-in. I do like this asset, though I do think there's a competitor product which is going to do better than this. But very interesting to watch data, see who actually does win the total return battle. Is eligible for your ISA, UCITS compliant, and it does have UK fund reporting status. Below is all the tickers in different currencies. So we've got YMAG for dollars, then we've got YMAP for pounds, then we've got YYYY for euros, and then we've got YMAG.MI for euros. Let's have a quick look at some total returns then. We'll just have a quick look at the pounds version, which is YMAP. First, we will look at how the NAV has held up. So we started at £36. We are currently up to £41 and 10 pence. So we've had 12% change on the NAV. And then if we go to a total return basis since the beginning, we're up 22.74%. That is including distributions. I think this fund is doing really good. I like how the NAV is growing. I like how the distributions are not too much, that it's overpaying. I think this is the sweet spot. And also, I think they tested this out originally over here, and now they've announced Target 25 funds in America. So I think this was a tester, and now they are going to launch them funds in America. So these are clearly working, otherwise they wouldn't be launching new funds out with the same kind of target. So next up, we have the Crypto Equity Income and Growth ETF. And this one has done good so far. I like how this one has been performing. One thing I do want to say is, this week we've had a huge announcement that Trading 202 have finally let this product on its platform, though it could be a couple months too late, unfortunately, when it's grown from 25 to 32 in that time frame, while UK investors were restricted from investing in this product. And now maybe they'll be expecting to everyone to pile in at all-time highs. But that is another topic we can have a talk about another day. So we'll run through some of the stats. Right now, we've got a 21.68% dividend rate. So as you can see, the payments have actually been growing so far. So we've got 3 payments so far. The first one was 47.86 cents. The second one was 50 cents. And this month's is 57 cents. Which is great to see. It all has equities inside it. So US listed companies in cryptocurrency and digital payment ecosystems, but it does not hold any crypto whatsoever. Everything looking good so far from this fund. The current AUM is 6.5 million. The management fee is 65 basis points, which is lower. And the distribution rate is 21.68% so far. It is a monthly paying fund. It is UCITS compliant, eligible for your ISA and your SIP, and it has UK fund reporting status. So scroll down a bit, have a look at some tickers. So the ticker in dollars is CEGI. And then we have the pounds version, which is CEPG. Then we have the euros version, which is ASWM. So let's have a quick look at some data. Let's see how the pound version has been holding up since it's come out. So we're starting at £18.50. The NAV has rose 32% in share price all the way to 25.73. And then we've had a little drop lately, so we're just at 24.42 right now. A little pullback after 32% rise does not really matter that much. But that is just share price. When we go to performance, we've actually gone up 36% since July. Now that is some performance for 3 payments only. So while UK investors were restricted from investing, this product has had 36% total return, which is a shame because it's done really good. And now it's at all-time highs, which I think is going to hold some investors back. I personally have only bought 10 shares because I want to see where this market's going right now, because crypto's a bit all over the place. We've seen a lot of volatility at the moment. So really don't want to pile into this fund. I've bought 10 shares to see whereabouts, put it in the portfolio, see where it's going. But really loving the data so far. I hope Rex shares can keep this up because the funds are looking really good. So next up we have FEGI, which is the Rex Shares Tech Income and Growth ETF. So this writes calls on 50% of the portfolio while leaving 50% uncapped for the growth. So this is why it's called Income and Growth, which I really like this, and the total returns are really showing you that these products are doing better than the premium income products. So let's have a look at some stats then. Let's have a look at some distributions. These have also been growing. If we look at these distributions, the first one was 29 cents. The second one was 30 cents, 0.1. And then the third one was 30 cents, 7.2. So we've had, the payments are growing. It is a basket of tech stocks, which it represents the US domicile large cap technology companies. It's not like the NASDAQ 100 where you have 100 companies. These have a smaller basket of stocks. So the AUM on this product is 10.2 million. The management fee is 65 basis points. It is domiciled in Ireland, so there's no withholding tax. The distribution rate is 13.19%. It is a monthly paying fund, and it is UCITS compliant and ISA SIP compliant and UK fund reporting status as well. So have a look at some tickers. So the pounds version is FEPD and the dollars version is FEGI. The euros versions are ASWL. So let's have a look at some data. So let's have a look on a NAV basis. So we have FEPD. It started at £18.50 and it's up to £21.21 now. So we've had a growing NAV of 15.15%. Well, if we look on a total return basis, we are up 17.54%. So it'll be very interesting to compare these income and growth ones to the premium income ones. The data so far is showing that the income and growth ones are higher in total return. And that is to be expected because instead of writing calls on 100% of the portfolio, you're leaving 50% uncapped. So it gives it that extra room for growth within the portfolio. So next up we have FEPI, Rex Shares Tech Premium Income ETF. And this one writes calls on 100% of the portfolio. So there's nothing left uncapped like the income and growth ones. So this one will pay out a higher income, but won't generally get a higher rise in the NAV. So if we look at the distribution, they have been very steady. We've had 3 payments so far. 0.5817 was the first one. 0.5840 was the second one. And this month is 0.5831. So very consistent paying. Again, it's the same portfolio as the Rex Shares Tech Income and Growth. It is just a different strategy that they are using. As we see, we've got AUM at 22.2 million. I think this just proves that people want the higher income baskets, but that doesn't necessarily mean you're going to get the best total return, because we can see the income and growth ones actually get the better total return. But when you look at the AUM, people generally want the income products, the higher income products. The management fee is 65 basis points. It is domiciled in Ireland again, no withholding tax, and the distribution rate is 26.33%. It is UCITS and ISA compliant and SIP compliant, and it also has UK fund reporting status. Look at some tickers. We've got the dollars version is FEPI, the pounds version is FEPG, and the euro version is ASWK. Have a quick look at some data then. From a NAV point of view, start at 1850, we are now up to £20.14. That is a rise of 9.36% in the NAV. And then the total return is 14.05%. As you can see, the income and growth ones are doing better on total return. They got released at the same time, exactly the same data, different strategy, different total returns. Depending on what you want to go down, whether you want the highest income or you want the more growth inside your portfolio, you can pick which fund that you want. I really like how they brought the two different funds out, tested them on the market, see what's best, and then investors can pick for themselves exactly what products they want for their portfolio. I think covered call ETFs have come a long way since 2022. Next up, we have MSTY, which is probably one of the most hated ETFs on the market right now. You only have to take one look on Twitter and see exactly what people are thinking about MSTY. This one, the underlying has been taking a massive beating. It's again down massively as of today or yesterday, I think, when tech stocks went down. Let's have a little dig into some data. 24.3 million AUM, 59 basis points. The distribution rate is 57.2%. I think that has gone down. One thing I do want to say as well is the YMAP version in the US has just gone weekly, but HANetf will not be bringing weekly payments. So what happens is it will be held by another company and then just paid on a monthly basis. But as we can see, this month's payment's actually the lowest one it's ever been. And that'll be because the NAV is actually going down. Very interesting one. Let's go through the data. And please, guys, let me know what you think of MSTY in the comments. So the first distribution was 1.29. And the next one was $1.24. The third one was $1.14. The next one was $1.05. And the one after, which is this month's, which was announced yesterday, recording this on the 23rd, is 85 cents. So as we can see, that line is going down and down, and you'll understand why. It will be because of the NAV, I think, because they're producing less income. Because MSTR is going down, the share price of MSTR is going down, which means MSTY will go down. So this one says UCITS compliant, no. ISA eligible, SIP eligible, yes. And UK fund reporting status. The dollars version is MSTY, the pounds version is MSTP, and the euros version is M5TY. So let's have a dig into some data. We'll have a look at the pounds version, see what's been going off. Interesting one, this. So if you look, since it's come out, 44.38% down on the share price. And if we just put MSTR next to it, MSTR is down 25-30% itself. So as we can see, it is not doing great. So let's have a look on a price performance. So because of the income generated, it is down minus 29.44%. MSTI is really struggling right now, which means MSTY will unfortunately get all the downside of the underlying. But I think MSTI is down to 280 share price now, which is really low compared to where it's been at lately. Let me know in the comments what you think of all these distribution announcements. My honest opinion, I think REC shares, income and growth funds are going to do the best. I think FEPI and YMAP are going to do great. And then I think MSTY may recover, once the underlying rockets, I think if MSTY gets a 500, 600 share price, you're probably going to see it back to where it needs to be. But until that happens, until Bitcoin goes absolutely crazy, it's looking bad for MSTY and MSTP. So next up, we have the preferred income ETF, PFFI, Infrastructure Capital Preferred Income ETF. This holds preferred shares inside an ETF. You may have heard of PFFA. That is the US version. This is the European version. It is monthly income again, so you'll get paid on a monthly basis. The first distribution was 13 cents. So we don't have much data to go off. If you do want to research this product, you can have a look at the US version, do some digging on that, PFFA. Jay Hatfield is the portfolio manager. Just under $1 million AUM, 981,000. This seeks to maximize income and pursue opportunities for capital appreciation over the medium to long term. The ETF invests in a portfolio of preferred hybrid or income generated securities actively selected by the management team. 80 basis points is the management fee, and the distribution rate is 8.18% so far. But is UCITS compliant, ISA and SIP compliant, and seeking UK fund reporting status. I'm guessing it will get this. It just takes a couple of months to get this sorted like the rest of the funds did. The dollars version is PFFI. The pounds version is PFFP. And the euros version is ASWNG. We don't have any data to go off. The only platform I found it on is Trading 212 that they've put it on right now. So it is up 1% on share price, and then you've obviously got your dividend coming in as well. I'll continue to put this in the distribution announcement since it's on the same day. And we'll keep tracking them, and we'll see what the total return like is from this product. I'd love to know your thoughts. Let me know in the comments below what you think of this distribution announcement. If you are an investor in any of these products, let us know how it's going so far. My personal opinion are the income and growth ones by RexShares are probably going to do the best on total return, following FEPI and YMAP are going to do great. I'm not too sure on the preferred shares one right now. The only thing I've been looking at is the US version. And if we look at the US version, come out in 2021, we're up 63%. That's on total return. It's up 13% on share price. It's down 5% this year, but it's up on total return. If we look at the share price, started at 25 and now it's at 21. So all time it's been out, it's actually down on the price appreciation, but it's up on total return. It depends what you want out of this product. So that's why for me, I'm going to watch the data, because the portfolio isn't exactly the same as the US version. We'll keep watching the data and keep looking at it. But thank you guys for tuning in, and I'll see you on the next one.